That's better. Very good morning to you all. I hope you had a very nice weekend. Now, as we come into the session, it's a straightforward session, albeit obviously a sad session with the geopolitical developments over the weekend and significant airstrikes going on now around the world with US and Iran in open conflict, and that's spilling over to wider countries in the region. So it's a fairly straightforward day from a trading perspective, and we're just going to run through what the key narratives are. So first of all, looking around markets, we can see US equity futures, European equity futures, equity markets are being sold on the risk-off trading, which is what you'd expect. Volatility elevated. Oil markets are booming with the Straits of Hormuz closed, and that's a major trade route. So we're looking for any dips in oil markets to be bought. We'll look at some technicals for buying oil. Gold, also a typical geopolitical hedge, that's also rising. We'll look at opportunities for dip buying in gold. We have to be careful. You don't want to just randomly buy. And if you notice, markets opened up at the highs and then sold off. If you just look at oil markets, what I want to show you is this dynamic so you sort of get to understand it. Hey, Stephen, yeah. Do you see how markets opened right high and then they sold off quickly? So what would have happened is going into such a very tense geopolitical situation, the risk was asymmetric to buying oil, buying gold, buying the dollar on Friday. And then if nothing happens over the weekend, you just close it out for a flat trade. But if you get that, you get something happen, and then obviously look, you can see oil spiked. What's that? 6-7% at the open. So just bear that in mind. If you're ever wanting sort of like a fairly sort of low risk trade, if there's some geopolitical environment bubbling over on the weekend, just buying dollar, buying gold, buying oil in this kind of environment, and then seeing it, if nothing happens, then close it. So it's a riskier tactic, but you can see that's what's going on. It's that strong buying and then selling at the open as people take profit on huge trades. However, the dynamic remains the same, and investors are going to be looking at this region thinking, okay, is this going to be 1 week, 2 week? Israel, I think, is saying it's a 5 week operation, and you're seeing the dollar being bid. We'll run through part of the reason for the dollars being bid, and net importers of energy like the euro and the yen are lower because they have to import their energy, and higher oil prices, that's bad for their terms of trade. The US, just to be aware, if you look here, is the world's largest producer of oil when you consider its shale production. So from a terms of trade perspective, US export revenues are now going to increase. The trade balance improves around the margin, and their energy sector is going to get a boost. And that's dollar supportive, particularly against major net importers of energy like Japan and Europe. Okay, so if you just look at that spike in the dollar, we're pushed over through that major sort of resistance and that trend line. And you can see the dollar's trying to build. And if you get a buying close above this 98 region, see that's upper right on the inside bar. If you get a buying close on that on the weekly, this is like saying the dollar wants to go up to that 99, 99.20. That's the way I'm reading this. And technically it's trying to make further gains. That sort of hammer reversal bar from end of January. So dollar strength remains a major narrative for the day, and that's what we're going to be looking at. In terms of the other currencies, CAD's benefiting. Obviously, again, it's got a lot of oil exports from its sand oil reserves. That's supportive for the Canadian dollar. Dollar also benefiting from its energy resources. Aussie dollar benefiting on its gold and commodity resources. If you just take a look at futures, you can see that gold, silver, copper, platinum, all those commodities up. That helps Australia's terms of trade. So you'd normally expect the Aussie dollar to weaken, but it's enjoying some benefits in this sort of, even though it's a risk-off mood because of the boost into commodities. Yen, one of the weakest as a major importer of energy. So that's what you expect. The Swiss franc, surprisingly, towards the lower end today. Now here we go. That's better. Yeah, Swiss franc climbing, which makes a lot more sense. Okay, this is what you typically expect. And weaker as well, with some Cyprus air bases receiving some Iranian drone attack. So that's just been weighing on the pound earlier in the session. So we'll have a little look, as always, at the opening news, but it's fairly straightforward today. Trump's suggesting the following Iran could go on for 4 weeks. So the question now is going to be, is this going to spill over? How long is this going to go on for? And there's a lot of uncertainties at the moment, but those uncertainties, at least for today, should keep the dollar bid. So we'll look at some opportunities for shorting the euro dollar, which makes sense because of the fact that Europe is a net importer of energy and the US is an exporter of energy, and that should support euro dollar downside for at least this session and into tomorrow. The currency headlines to look at, that's the dollar, that's the pound. We've covered that with Iran targeting UK base in Cyprus. Dollar yen, choppy. Dollar strength should support the dollar yen today. So we're going to look at some technicals. Just wanted to point out, remember on Friday, we had that hotter than expected PPI print out of the US. So with oil energy prices going up, with this PPI impact, and we saw dollar strength come in on that, didn't ultimately last, but now it just feels like the balance has pushed in favor of more dollar strength. So it's a firm euro dollar sell. And remember, we may well see a more hawkish pricing coming in for the Federal Reserve as we go through this week. In terms of data to be looking at, the first important data is the ISM manufacturing print. The services will be more important, but still this can move the markets around the edges. Apart from that, there's not a lot going on in terms of data, but if we get a very weak data here, that can influence markets in terms of expectations from the Federal Reserve. But if we get a strong print, that could support further dollar strength. Not a lot in terms of data. It's going to be mainly global headlines coming from what's going on with US, Iran, and the wider Middle East. So watch out for sort of rallies and then sudden sell-off on headlines. But the bias remains what we're seeing in futures market. So equity downside, oil upside, commodity upside, bid into the dollar, and a slight sell-off in US treasuries. The opportunities that I see are as follows. So first of all, oil. Number one, we've broken above this key major trend line on the weekly chart. Right. So you can see this. This is a potential trend line break. Now, this is a good example of a potential trend line break. You've got 1, 2 touches. Now, some people say, oh, that's not a valid trend line. Yes, it is. Okay. Because this trend line is sticking out. There's nothing the other side of price. If price manages to stay and hold above this, this is the level that it's going to mark. It's going to try and hold from. Now, there's 2 areas to be looking at. First of all, we've got this potential flag pattern forming. So we'll look at that on the 15-minute chart in a minute. But for now, just notice we've got this rising window. See this very large gap here? That was a gap at the open. So this now becomes major support in this rising window. And in the middle of that rising window, we've had a test of that trend line. So what I'll be looking at here is if we have another test of that level, maybe just give it a bit of a wider stop, maybe a $9 stop, and make it $10. Not $10, hang on, how many points do we want this? Yeah, I'd make this about 80 points, something like that. and try up to 3 times on a retest of that 70 region here. Right? So if we go back and retest 70, it's in that gap area and it's a test of that major trend line. That's area 1. Okay, so watch this. The next area to watch is here. This trend line to the upside. If you get a break and hold above it, go long. Okay, as long as you stay above that trend line. Stops relatively small, just the other side of that structure. Right, if you go back underneath, then move the trend line up to get. But we should expect one breakout here, okay, on oil, and just break higher and go with the break with a 15-minute close. That's oil. Anyone still long from that standard deviation point from last week? Okay, just keep trailing your stop, right, up. Otherwise, I'm going to stay away from the dollar yen because there's better opportunities that I can see out there. Euro pound, the buy bias remains. We're still looking for a move up into these highs around that 8820 region. That's what I'm ultimately looking for. If you look on the monthly, right, you can see a bullish engulfing bar looking for a move back up to this 88 sort of 20 region, these highs here. Okay, so Euro pound buy bias still remains in play. Looking at gold, another couple of areas that are really interesting. So again, look, this rising window from the open. Also, we've got this implied volatility level at 5372. That means for gold, if we get a drop back down to that implied volatility level at 5372, that's suitable for buying there. Right? And also, just notice, I don't know, thanks Stephen for your little Donald Duck having a good day. Well, that gold is a great example of that. You see here, when you have a market opens aggressively like we had, look for sort of breaks of trend lines, kind of flag type patterns. So you can see here, like price moved up, retraced, broke out of that potential flag pattern, right? Then you have another trend like breakout. So again, it's to look for a potential breakout from the 5406 up above that level, right? Stops remaining in the other side of that structure, and or a return of that 5372. Maybe like have an $8-9 stop, try up to 3 times. But that 5372 is a good area for potential buyers. Okay, that's what to look for gold. Like if we got all the way down here, this would be, I don't think we're going to get it because we're so bullish on gold, aren't we, with the geopolitical risk. But if we were to go all the way down to this bottom of this rising window, that would be a great entry there, $13, maybe a bit less, $9 to 2 or 3 times here, down at that 5300-ish area. Okay, that would make a lot of sense if you could get down there. Rising window, and it's the bottom end of the rising window. So very, very strong area. The other trade that I see is euro dollar. Remember from last week, this was the area. Stay above, stay with it. Stay above, stay long, get underneath, go short. We also had this area here at the 1.1742. Right, that was a great area. You can see market gapped underneath it, tested, sold off, tested again, broke through, and then finally broke through in the early morning of Europe, right? That remains a legitimate area for shorting from. Get back up to that 1.1773. That can be shorted from. Try up to 3 times, just like a 4 or 5 point stop, but also at this level here at the 42. And that's suitable because of this. Remember this structure we were looking at, this false break of Harami inside bar. This is an inside bar structural break, and that is a extension from the nose of that hammer reversal all the way down here. So the best opportunity, the highest probability would be from that 7742, but this is okay intraday because of the strength in the dollar. So this is a good area. If dollar buyers want to come in, that's essentially a breakout of that level. You see, that this is really all this is a breakout retest, right? So it's straightforward breakout, retest, on, right? But you can just keep the stop very tight. So try up to 3 times would be my analysis on this. at the 742, but also try up to 3 times if you've got back up to the 7741. So dollar strength remains the name of the game today. And I don't see anything for that to change. And either way, taking very minimal risk. If that risk can be less, it can be more like 5 points here up at that level. But these two levels are both legitimate for shorting from, right? And then it's just trying to hold it, looking for fresh lows as we go into the US session. Yeah, yeah. Euro dollar short make a lot of sense because of that big dollar strength, right? So getting into that was a good move, Stephen. Well done. Very nice. Yeah, makes a lot of sense, that area. And again, remember that structure we were looking at from last week, Harami inside by a false break. I was surprised it didn't fall down on Friday with that hot PPI. So that was quite a surprise. Yeah, I was looking at BTC and I was surprised to see it up, almost digital safe haven. Oh, nice. Thanks for that. That lows the year. Let's have a look at that. Just goes to the day with that trend line. Yeah, nice. Yeah, very nice. Good spot. Good little observation here from Mornay. And thanks for pointing it out. That's really worth it. You see here this break of this daily trend line that we're trying to see. And again, Mornay is absolutely spot on. Because you might look at that and go 1, 2 touches. The purists say, "Oh, that's not a trend line." Yes, it is, right? And it's a very valid one because a break of that level is significant. So yeah, gold star Mornay, that's a lovely level, and that's just showing a great area for shorts here. Yeah, excellent. Yeah, BTC. Let's have a look at Bitcoin. Let's see which chart to look at it. Let's get rid of the dollar yen. Okay, negative correlation to oil. So first of all, Bitcoin has quite a strong correlation to Nasdaq, and you can see that sympathetic moves tends to be quite similar. Although Bitcoin's been selling off faster than Nasdaq has been recently. Let's look at oil. Yeah, yeah. Just looking at the correlation. Yeah, they tend to be moving quite similarly to each other, don't they? Okay, that's oil moving lower, Bitcoin higher, oil higher, Bitcoin higher, oil and Bitcoin moving together, oil and Bitcoin moving together, negatively correlated as of late. Yeah, oil up, Bitcoin down. Yeah, there is a negative correlation there. You can see it, but it tends to be a bit sporadic when it's going. So let's have another look at technically at Bitcoin. Yeah, okay. If it is going to drop, there is one technical kind of area that's standing out to me, which would be if you get continuation lower as a kind of like falling pennant, a kind of falling flag, sharp drop, consolidation. So a drop below that level would be my confirmation of more Bitcoin falls. And you look at it, it's very marginal, isn't it? So what have we got? 0.75% gains. Yeah, okay, so Nadjam's got a nice support zone. So let's just zoom out and see where we are. Yeah, and Nadjam's absolutely spot on. There's a couple of nice support zones. There's one sitting underneath it here at the 56, 57. You've kind of got this 200 exponential moving average, which it's flirting with. And probably most significantly, you've got this heavy support here that was just sort of sat in the middle of. It's got a bit choppy, hasn't it? So support, bit choppy, support. So you could see like technically the potential for a move down to the 55 on a break here. In terms of like the geopolitical, yeah, Mornay, this is one of those scenarios when you might very well be right. I'm not in tune with Bitcoin's correlation to geopolitical risk, and I don't feel confident to know what's really driving it. So what I would say is, if you've got that confident macro narrative, what stands out to me would be a break of this trend line on further downside. Yeah, and then you could just keep the risk quite minimal. You could even have it as a yeah, okay. So Najam's looking for a close under 60 for shorts, which is kind of your breakout retest narrative, which seems very reasonable. It's certainly not spiking, is it, on this? And the near-term momentum has been lower. Technically, what I do like about it, Mornay, is this little structure. It's a kind of revert, an upside down flag. It's just, yeah, nice. Thanks for bringing it to the table, Mornay. And I'm sorry I can't be more helpful for you. But the only thing I say is technically that's nice, and that means your stop is super tight. So even if you had an entire structure stop, you've got a fairly decent risk reward, even down to that 50,000, nearly 2 to 1. Yeah, thanks. Have a look at that. Right, I'm just going to save that little link. Thank you, Mark. Yeah, okay. So structurally, that's nice. Just going to see if there's anything else on this. Sometimes there's another little indicator I like for hidden bearish divergences, which are great. Which has just got the potential for one. I can see that. Just looking at this in a different technical light. Okay, folks, that is all for now. Keep risk tight, and remember, it can be quite choppy on a day like this. Okay, that area is a lovely area. Great spot, Mornay. That large trend line, very significant there. It makes it less likely we go up to the 7.3 as well, given that strong trend line. All right, folks, enjoy the rest of your day. Keep the risk minimal. Otherwise, I look forward to being scheduled to see you tomorrow. Yeah, cheers, Mornay. Cheers, guys. See you later. See you, Brian, Mark, Najam, Stephen. Take care. Bye for now.